Well, what a phenomenal move the stock price of BHEL has seen. From its March lows, the stock has managed to rally a whopping 100%. And in the month of May, the stock has seen a rally of nearly 40% since May to now. The last 10 days as well, the average volumes have been very strong at about 17%, and the cash volumes as well have been the best recorded monthly volumes in the month of June. Now, the bullish argument for BHEL stands for a number of factors that, while there are concerns that emanate, the anti-China theme is definitely going to get BHEL get orders. You've heard it from the management as well with those global manufacturing centers, and that is something that is piquing analysts' interest. Also, the fact that the company is very capable of diversifying, that they can make any products in power, engineering, and even diversify to spaces like electric cars, solar, etc. All of that is very opportunistic for the company to do well in the long haul. The fact that the capex cycle after this very tough period will stand to recover and pick up, well, BHEL is definitely going to be a beneficiary of that. The government too is looking at value unlocking in a lot of public sector enterprises, and BHEL is going to be one of them that will be very closely eyed. So that's another big positive. The supply as well to India's utility scale power generation can help drive the company's after-sales spares and their services business. It's the only Indian company to be associated with all three stages of the nuclear program. The spares sector as well can be scaled up in private hands, and that can help plug a lot of leakages to competitors. So a lot of positives do remain. While there are risks with respect to the delay in the government divestment, a slow turnaround in power orders, employee resistance to the divestment, as well as aggressive bidding due to increased competition, the road ahead for BHEL seems very strong, and even that seems to be reflected by the management commentary, but especially on the fact of building on the Make in India Aatmanirbhar initiative, BHEL is a strong contender.
It's me great pleasure now to bring on board the Chairman and Managing Director of BHEL, Mr. Nalin Shinghal, to talk about how BHEL in a sense is really in a formidable position to benefit because of Atmanirbhar Bharat. BHEL in a sense was rather an icon of Indian engineering sector, but given that private competition has intensified, you've got a lot of cheap imports which are in the power sector which are happening from China, have really added a lot of volatility to their quarterly numbers. BHEL at some point in time was India's most valuable engineering company. Now the stock is trading below its book value. But to understand the implications of Aatmanirbhar Bharat and how this could reboot BHEL, let's connect with Dr. Shinghal himself. Dr. Shinghal, good morning. Thank you for joining us. You talk about Aatmanirbhar theme in India. The Prime Minister in a sense has really outlined his vision on India should become self-reliant and the pillars one should focus on. How do you think BHEL is stacked up to really capitalize on this?
Well, we have, I would start that going back with our traditions. We have been at the forefront of indigenous manufacturing for so many decades. And for us, it's just an opportunity to come back to our roots. We have, if you look at the energy sector, more than 57% of the energy generated in this country comes from BHEL sets. So that's the sort of, and if you look at our manufacturing bases, our employment in the company. So for us, Aatmanirbhar Bharat is going back to the roots and is something that we are sure we will play a very important role in, and we are going all out for that.
What is the status on the various government or the various EoI expression of interest with BHEL had invited a few quarters ago, where you are open to share or where you're open to really sublease some of your manufacturing capacities and capabilities?
So we floated an EoI, which was floated in end of April, inviting global manufacturing companies to partner with us to leverage our facilities and capabilities to set up manufacturing base in India. And I'm happy to say we have a huge number of responses, more than almost 60 relevant responses is what I would like to say. And we are going ahead with that. Some very good interests are there. And yes, we are taking it up on top priority and on fast track.
So how will these global alliances change the face of the company? Will they add technology? Will there be some IP advantage you will get, or this is going to be a simple pass-through that you're leasing out your manufacturing capabilities, and that will be adding back to your current top line as well as your bottom line?
So as I was saying, that's in terms of the business, our main business has been on the decline. So the thermal sector, and we are looking at diversification in a very big way. So this would certainly help us in that diversification, in looking at new areas, growth, as well as in technology acquisition. So both areas we expect, we are very positive on this.
The challenge for BHEL really has been in smaller power plants which have capacity below 50 gigawatts. BHEL has not been able to compete in that. You've lost market share there, and you've lost market share both to imports as well as local competition.
Look, we are into an area of 200 megawatt plus, and in that, let me say, in the last few years, there's nothing coming from China. So it is primarily Indian sets. There was a stage where there were a lot of Chinese power plants coming in. That era is past. Today, the in the larger size, the power plants are not Chinese power plants.
So right now, if one looks at the total order book you have, it's dependent on the power sector stroke the thermal sector. About 80% of your order book comes largely from the power sector. Are you looking at diversifying out? Are you looking at really going beyond the thermal sector, maybe railways, defense, because these are pockets which clearly will be opening up now?
Yes, certainly, because it has to be, because we are all aware that power and thermal, there is a huge change happening worldwide. And if you look at the capabilities of BHEL, it's a huge engineering organization, the engineering capabilities. So therefore, it is in line with that we are looking, we are looking to transform from a power sector organization to a global engineering organization. And if you look at it from a perspective of an engineering organization, there is no end to what is available. So there is, the market will rise, whether it is railways, whether it's defense, whether it is whatever else you may want to look at. There is no end to what is available.
Having said that, BHEL was sitting a couple of years ago on cash which was north of $1 billion. Now your cash total, or the cash on the books, has come down. For a company which in a sense does not require too much of capex, what is the plan in place to improve on your cash flows, and how are you looking at generating cash flows, because they clearly are under stress, because that's in a sense has really affected your stock price also?
You're absolutely right on that. So it's, we are looking to cash is a very major in the current year for every, I think every company around the world. Cash, liquidity and cash are important, and for us specifically so. And we have taken a very major thrust on two ends on that. One is realization of outstandings and from completed power plants as well as ongoing. So huge effort is on that, and other on cost cutting on various fronts. So there are two very huge exercises that we have going on the cash front, which we expect to start giving results in the near future. And the other side is, of course, that when we look at projects, we are looking at bankable projects essentially. So where, if need be, we will be able to go for loans for project funding.
Right. BHEL is also sitting on surplus land bank. Now, according to estimates, the land bank is valued between 12,000 to 15,000 crore. What is the plan to monetize it?
So we have a big land bank, and which we are essentially looking for our own growth and development in terms of our own activities and related activities, and that's the way we will be going off. In fact, through this EoI also, whatever activities we come to, and going forward, we are also looking to support development, domestic development also for various technologies for industries who are looking to disentangle their manufacturing supply chains. So we'll be using it for all these activities.
What would you say currently is the biggest challenge for the Indian manufacturing stroke engineering sector? Is it land, is it labor, or is it simple skill? When I say skill, each country has an advantage in terms of skill and scalability. Do you think Indian manufacturing sector lacks it?
So it's a number of factors. You see, you've named a lot of them. And one of them is also scales, economies of scales. We have not managed to achieve economies of scales. Then, of course, capital costs, your land. So we have actually, if you look at global scale manufacturing, we haven't gone into that in a very big way. So that is what we will need to be looking at, pick up focus areas and go for global scale manufacturing. That's how we'll have to come out of. We'll have to manufacture for the world.
So what is next for BHEL? Last couple of years have been tough, largely because of challenges in the power sector, the fact that your receivables have gone higher. What could be the next, how will the next 3 years pan out for BHEL? The recovery part which you just mentioned, do you think that is still a distance away, or in the next 12 to 18 months you think BHEL will be able to revive and come back on the growth path?
Where I wanted to be is a lean and mean BHEL, going, sitting with it, utilizing its capabilities fully, diversified from where it is now. And again, back to where it started from as an icon of Indian.
Dr. Shinghal, one would imagine that for any manufacturing company, the most important moving part which will kick in operating leverage and financial leverage is capacity utilization. You have not utilized your capacity or your capacity to its fullest. It's 30% somewhere, it's 50% somewhere. So what is the plan in place in order to increase your capacity utilization? And if one works with an assumption that in next 6 to 10 months, some of your global EoIs would be forged, what will that do to your current capacity utilization then?
So in terms of utilization, this varies actually, you see, because there are some areas where we are capacity constrained and we are looking to do debottlenecking, looking at investments to increase our capacities. But there are other areas where we have equipment sitting idle as well. And we don't really have a specific, target that no, we are going to outsource this sort of capacity. But what we are looking at is improving capacity utilization through various efforts like contract manufacturing, like Make in India, diversifying. So a number of those efforts are on, and I think this is something we'll continue with.
Markets or stock markets are giving a stepmotherly treatment to BHEL stock. You're trading way below its book value. Markets are of the view that right now there is a huge opportunity for BHEL, but somehow given the challenges and given what the problems are, BHEL is unlikely to really capitalize on some of those opportunities. So how would you defend that BHEL is back on the track, and what would you indicate or tell the markets?
So, again, there are two bits to this. One is of course external factors. What this environment in terms of the market, the thermal market and power sector market going down, and but the other bit, as you identified, is the execution bit, and we are looking to handle both of these bits. The first one through the diversification, and the second one to a much tighter focus on execution. So you'll be. I'm happy to tell you that yesterday we did groundbreaking at Sagardegi, and this is the first time. It's a record because on the zero date, it's the first time that we managed to do a groundbreaking on the first time for a project. And that's the way we plan to take forward our projects in a much tighter tighter way. And we also have a project management system coming in place. Integrated project management system is coming into place. So there's a huge focus on tighter project management as well as cost cutting. I think that should start giving us dividends soon.
So I'll ask a simple question, which is that what are your targets or what are your growth targets for next 2 years?
So our long-term target is 50%. That 50% has to come from non-thermal, non-coal businesses. This is what we are looking at. And of course, in the power sector itself also, we are looking at a number of things going forward. We are looking at services in a very big way. Your monitoring and asset management That is an area that we are looking going into Industry 4.0 as well. And then new technologies, we are looking at clean technologies, we are looking at high efficiency technologies, the advanced ultra-supercritical power plant project, which is also on. So both areas we are looking at.
So let me very quickly just summarize our today's interaction, and I don't want to get this one wrong. Your view is that next 2 to 3 quarters at least would be challenging for BHEL because of the existing environment and because of COVID crisis. But you expect that in the medium term, which is let's say FY22 and FY23, things would be back on track, and that really could be the turnaround period, so to speak, for BHEL.
Look, there are a number of things here. I mean, COVID itself. So as a industry as a whole, I don't know how we have been discussing at a number of levels, and by and large, industry as a whole and the GDP and the economy as a whole is looking at a negative figure for the current year. So that so that is one major issue. Then specifically, if you come to the EOI related stuff, a lot of these we are trying to get in much quicker. There are things which can move quickly, so they will happen quickly. But yes, certainly, if you are looking at the final effect on the bottom line, that will certainly take some time to come.
So closing comments, if one has to really summarize that, what are the important policy changes and what are the important administrative stroke government push which is required to revive the engineering stroke manufacturing sector? So if you really have to share your thoughts on that, how would you summarize it?
So you see, one major requirement that we will have in this front is technology, because a lot of our technologies we have, we are looking at, we have not been able to indigenize technologies, and the other is going to be scale. So these are the two things which will really bring us at world level. And even on the technology front, we are going ahead and offering to partner with other companies to help them in the process of technology development, prototyping, design development, prototyping, testing, all that. That also we are doing.